Hey everyone, and welcome back to the channel. Today we're tackling a topic that can feel a little intimidating at first, but is super important for your financial health. How to read your credit card statement. I know. It looks like a jumble of numbers and weird terms, but trust me, by the end of this video, you'll be a pro. We're going to break it down, section by section, so you know exactly what you're looking at and what you need to do. Understanding your statement is the first step to mastering your credit, saving money on interest, and avoiding nasty fees. So grab your latest statement or just follow along, and let's demystify this thing together. First up, let's look at the top of your statement. This is the summary section, and it's designed to give you the most important information at a glance. You'll see your name, address, and your credit card account number. It's always a good idea to quickly check that this personal information is correct. Right near that, you'll find two very important dates: the statement date, also called the closing date, and the payment due date. The statement date is the last day of the billing cycle. Any transaction you make after this date will show up on your next month's statement. The payment due date is the deadline for when your payment must be received by the credit card company. This is a critical date to remember. Mark it on your calendar, set a reminder on your phone, whatever it takes. Paying late can lead to late fees and can negatively impact your credit score. Now for the big numbers in the summary: the new balance and the minimum payment due. The new balance is the total amount you owe for that billing cycle. This includes all your purchases, cash advances, balance transfers, plus any fees and interest from the previous month. If you want to avoid paying any interest, this is the number you need to pay in full by the payment due date. Right below that, you'll see the minimum payment due. This is the smallest amount your credit card company requires you to pay to keep your account in good standing. It might seem tempting to just pay this small amount, especially if money is tight, but be careful. If you only pay the minimum, the remaining balance will be carried over to the next month and will start accumulating interest, which can get very expensive very quickly. We'll talk more about how that interest is calculated in a bit. Next, let's find the account activity or transaction summary section. This is basically a detailed diary of your card usage for the month. It lists every single transaction chronologically. You'll see the date the transaction was made, the date it was posted to your account, which might be a day or two later, the name of the merchant or business where you used your card, and the amount of the purchase. This is your chance to play detective. You should carefully review this list every single month. Make sure you recognize all the charges. Do the amounts look correct? This is how you can spot fraudulent activity early. If you see a charge you don't recognize, contact your credit card company immediately. It's also a great way to see where your money is actually going. You might be surprised how those daily coffee runs or online shopping sprees add up. Somewhere in this section, you'll also see a breakdown of payments and credits. Payments is pretty straightforward. It will show the payment you made on your last bill. Credits are any refunds you received. For example, if you returned an item you bought, the refund will appear here as a credit, reducing your total balance. Make sure any returns you've made are properly reflected here. Sometimes, it can take a few days for credits to post. So if you made a return right before your statement closing date, it might not show up until the next one. It's just good practice to keep your receipts until you see the credit on your statement. Okay, let's talk about the part that everyone loves to hate: fees and interest charges. Your statement will have a dedicated section for this. Fees can include things like an annual fee for having the card, a late payment fee if you missed your last due date, or a foreign transaction fee if you used your card in another country. The best way to deal with fees is to avoid them. Pay on time, and if you're traveling, consider getting a card with no foreign transaction fees. Now, for interest charges. If you carried a balance from the previous month, this is where you'll see how much interest you were charged. This amount is calculated based on your annual percentage rate, or a PR. This section can be a real eye-opener. Seeing that dollar amount you paid in interest can be a powerful motivator to start paying your balance in full each month. To understand how that interest is calculated, you need to look for the interest rate or a PR section on your statement. It might be in a box near the bottom or on the back. You'll probably see a few different APRs listed. There's an April for purchases, which is the standard rate you're charged on things you buy. There might be a separate, and usually much higher, APR for cash advances. That's when you use your credit card to get cash from an ATM. Try to avoid this if you can, because interest on cash advances often starts accumulating immediately with no grace period. There might also be a penalty APR, which is a very high interest rate they can apply to your account if you pay late. Reading this section helps you understand the cost of borrowing money with your card. Now, let us find one of the most useful, but often overlooked parts of your statement: the credit card summary, or year-to-date totals. This little section gives you a running total of how much you've spent for the year, and more importantly, how much you've paid in fees and interest so far. It's a great way to track your spending habits over the long term. Seeing that you've paid a few $100s in interest over the year can be the push you need to create a debt payoff plan. It's all about awareness. The more you know about your financial habits, the better you can manage them. Finally, let's talk about the minimum payment warning. By law, credit card companies have to include this on your statement. It's usually in a box and it shows you two things. First, it tells you how long it would take to pay off your current balance if you only make the minimum payment each month. Second, it shows you the total amount you would end up paying, including interest. You'll likely be shocked to see that a balance of $1,000 could take years to pay off and cost you hundreds, if not thousands, in extra interest just by paying the minimum. This is not a suggestion, it's a warning. It's designed to show you the true cost of carrying debt and to encourage you to pay more than the minimum whenever possible. So there you have it, a full tour of your credit card statement. It's not so scary once you know what each part means. Let's do a quick recap. Check your personal info and key dates like the payment due date. Know the difference between your new balance and the minimum payment. Scrutinize your transaction list for accuracy and to track spending. Understand your APRs and how fees and interest are charged. And finally, pay attention to that minimum payment warning. Making a habit of reading your statement every month is a fundamental skill for building good credit and a strong financial future. It puts you in control of your money. Thank you so much for watching. I hope this breakdown was helpful. If you have any questions, drop them in the comments below. I'll do my best to answer them. And if you found this video useful, please give it a thumbs up and consider subscribing for more content on personal finance made simple. See you in the next video.